current homeowners who are trying to refinance?
So right now there are tremendous opportunities for consumers to refinance. Rates are at historic lows. Now there are a couple things to think about when you are refinancing. It's important to get your documents in order beforehand. You might want to consider getting an appraisal on your home before you actually refinance. Be able to put down a real down payment. And absolutely shop around. At LendingTree, what we're seeing with lenders is that there is a wide disparity in rates from the lowest offers to the highest offers, just given the increased activity in the market. So it's really, really important to shop around.
And do you have any advice for a homeowner who is looking for the next home or first-time home buyer?
So first-time home buyers have, I would say, give very similar advice to refinancing. It's important, first off, it's important to get the right deal. You need to shop around and make sure you're getting the right deal on your home. It's important to compare when you're getting a mortgage, not just the rates, but also the points, the fees, and all of the closing costs. It's important to get the right product, to think about, are you going to be in the home for a very long time? You might want to get a 15-year or 30-year fixed loan. But if you're going to be in the home maybe only 5 to 7 years, it might make more sense to get an adjustable rate mortgage. And of course, it's important to make sure you're comparing several offers and actually comparing apples to apples across all of the elements of the loan.
So I know that you started LendingTree. You had an experience with a bank. Do you want to tell us about that?
I did. When I was right out of college, a couple years out of college, I was buying my first home. It was a $55,000 condominium in Pittsburgh, Pennsylvania, and I went through the process that everybody else goes through. And even though I was an accountant, I felt very confused and disempowered by the whole process. I saw, for example, rates in those days. The rates were either on a rate table in a newspaper or they were hanging in the window of a bank. And then you go in and you apply, and the banker was not the friendliest. And I felt like, even though I was the customer, I was sort of begging them for a loan. And after that, I said, this is ludicrous. We need to create a process that turns the tables. The consumer's the customer. The bank should be happy to be lending us money. And so we created LendingTree, where you fill out one form and banks compete for your business. And you get multiple banks competing, and they need to ask for your business as opposed to you sort of begging to be one of their customers. And it's worked out great. We just crossed our 30 millionth customer in the United States that we've helped through the mortgage process.
So you do see that the process is a lot easier now, or it's much more manageable for someone?
It still is a challenge, but we've certainly improved the shopping for rate experience and the ability to make sure you're getting the best deal. For example, we have a tool on our website that actually gives you coaching and advice where you can put in the rate, points, and fees of any loan you're getting and tell us about your credit score. And we actually tell you whether it's a good deal or not, and then give you coaching advice on how to negotiate a better deal. Now, I think technology over the next few years is going to make it even more streamlined to make it easier to close loans and shorten the time for closing. But right now, those processes are still somewhat challenging, but it's getting better every year.
So what do you think the housing market is going to do? What do you see in the future?
Well, if I could predict the housing market, I would certainly keep that information. I'm just kidding. But no, housing, I'm seeing a long, slow recovery in housing. It is clearly market by market. Florida is one of the more challenged markets in the United States. We at LendingTree every month put out a housing index and publish it on our site. And Florida has, as you all know, a very challenged market with lots of foreclosures. There is also a big shadow inventory of homes that are not yet on the market that banks are either not foreclosing on or consumers want to sell, but they can't sell because they're upside down. And so I think it's going to be a long, slow exit from this very challenging market.
What do you consider long? 1 year from now? 2 years from now?
I think it's going to be more than 2 years, so three plus years. Now, that said, I do think we are seeing early signs of progress, but it's not the days of 5 or 6 years ago when you could buy a home today and it's worth 20% more next year. I think we're going to see property appreciation, in line with kind of the 1-2% in line with inflation. I don't think people should be thinking about homes as the investment vehicle anymore. They should be thinking about it as something that they can live in. It's certainly very tax efficient, and you got to think twice. But at the same time, there are opportunities. You just need to be very smart and very careful.
Do you think the government could shorten this process for us? I mean, why do we want to go through another 3 years of this?
I do believe there are several fixes that the government can do, and I am actively promoting them on Capitol Hill and with legislators. I remain skeptical about whether these things will get implemented in an election year, but they all center around availability of credit and giving the opportunity for consumers to actually start transacting. So, for example, a few of the things that I think we can do. In appraisals, most consumers are getting denied right now because they can't get a good appraisal. And that's typically because either there aren't comparable sales, or the comparable is a home that's been in foreclosure, which typically is at a lower price point. So you can't get your home appraised. We think the government could direct Fannie Mae and Freddie Mac, who insure most loans, to loosen the appraisal guidelines, or to give you a band to say if it's within 10% of an appraised property, that would be okay. I think the government could create tax incentives for consumers to buy and sell homes. Believe it or not, you have to pay taxes on the appreciation of your home, but if you lose money on your home, you're not allowed to deduct that on your taxes. We could do things like that. And the biggest thing I think we need to do is level the playing field between the banks and the non-banks, and the big banks and the small banks. A lot of the regulations over the last few years have really made it possible for the big banks to gain share, but a lot of the little guys have moved out of the industry and in some instances gone out of business. What that's done is constricted credit and made borrowing costs higher for consumers. Right now we're seeing that mortgage rates, which typically are an increase over the price of what are known as treasury bills or government debt, that spread is double what it has been historically right now, which means rates actually could be a lot lower.
With the foreclosure the way it was, you know that a lot of homeowners, they don't know much about money, so they trusted the banks, and now they're in foreclosure. So what do you think about it, and do you know of a software program that could help homeowners to figure out money? I mean, or should they rely upon the bank?
Well, I don't think that the central premise of LendingTree and a core belief of myself is that you need to take care of yourself and you need to do your own research and not trust the big banks. Big banks are certainly helpful in some ways, but they're also looking to make their own profits. And that's central to LendingTree, and it's central to me. Something else, though, that I invented recently, I founded a company called Tycoon, Tykoon. And it's a belief of mine that I believe there's a lot more that families can do to pass on smart financial values to their children, so that children will actually grow into educated and smart adults. So the way Tycoon works, parents go in and they set up an account for their kid, and kids earn money through chores and doing jobs. And you set up an allowance, and then you divide the money that the kid's going to earn between saving, spending, and giving. And I believe those are all three important. So then their kid can go in and he earns money and earns his allowance by doing chores and jobs, they say, and then he or she can actually spend money through a relationship we have with Amazon. So he can save up for longer term goals, whether it's saving for college, et cetera, and then also importantly give money to charity and actually see those things happening. And what we're seeing from the about 1,000 people that are using the site right now in a beta program is kids are actually really excited about earning money. They're actually really excited about saving money. And they're actually excited about doing chores, believe it or not. It's one of the things that moms face. My daughter, for example, just came to me the other day and said, "Dad, can you add more chores in for me to do? Because I want to get up the leaderboard on Tycoon, and I'm saving up for this thing I want to buy, and I need a couple new jobs to do." So my belief is as long as you're earning money and you save first, and you give first, then it's okay to spend responsibly. Well, what we want to do, we want to create a generation of young adults, fast forward 20 years from now, who are financially savvy and smart about their money.